Welcome back to Beyond the Backtest, the systematic trader's journey. This is episode 4, and we're calling it The Idea Factory, from observation to alpha. I find this is often the most mystifying part of the process for many. Where, in the vast ocean of market data, does one find that initial spark? It's a question that blends art with science, creativity with rigor, and today we're going to demystify it. We'll explore the creative heart of systematic trading, looking at where profitable ideas truly come from. We'll walk through the entire journey together, starting from a simple, almost casual market observation, and methodically shaping it into a concrete, testable hypothesis that's ready for the backtesting engine. So, let's begin our exploration. So, where do we begin this journey? Well, I'll find the foundation of every single robust idea starts with simple, active observation. Now, this isn't about passively watching price tickers flicker across a screen until your eyes glaze over. It's a far more engaged process. I like to think of it as being a naturalist stepping into a complex ecosystem for the first time. You're not just admiring the scenery, you're looking for the subtle, recurring patterns. You might notice, for instance, that after an earnings surprise, certain sectors consistently seem to overreact, creating a predictable ebb and flow. It's about cultivating a deep curiosity for these anomalies and inefficiencies. This active, methodical watching is where the very first seeds of alpha are sown. It's less about finding answers and more about learning to ask fascinating questions. Of course, our own observations are just the starting point. So, where else might we look for that initial spark? One of the richest sources, I find, is the deep well of academic finance. Reading the classic papers on factors like value, momentum, or quality isn't just a history lesson. It's like being handed the original blueprints for strategies that have shaped markets. It provides a truly solid theoretical grounding. Then there's the professional steer. What I often do is delve into industry white papers from large asset managers or investment banks. These are fascinating because they tackle very current market phenomena with rigorous data-driven analysis. And finally, a wonderfully practical approach is to deconstruct the work of others. You might find it incredibly insightful to take a popular ETF, read its prospectus, and truly understand its methodology. What factors is it trying to capture? It's like looking under the bonnet of a finely tuned engine. Right. So we have this kernel of an idea, perhaps from an academic paper or our own observation. The critical next step is to transform it from a vague feeling into a precise, testable question. A concept like value stocks do well is simply too fuzzy for a computer. What I find indispensable is framing it as a clear hypothesis. If X happens, then Y will result because of Z. This structure is our compass. For instance, that idea about shorted stocks. We could formalize it as, if a stock's short interest is in the highest decile of the market, that's our X, then it will underperform its peers over the subsequent month, our Y, because this intense borrowing demand reflects informed negative institutional opinion, our Z. Do you see? It becomes specific, measurable, and gives us a reason why. It's the blueprint for the entire backtest. Now, with a well-formed hypothesis in hand, we arrive at a step that I consider absolutely non-negotiable, applying the economic rationale filter. It's a stage that I find is all too easily skipped in the rush to get to the backtest. Before I invest any real time, I always pause and ask myself the fundamental question. Why should this idea work? What I'm looking for is a plausible, persistent reason. Generally, I find that robust ideas are rooted in one of three areas. Is it a known behavioral bias, like investors herding into popular stocks? Is it a genuine risk premium, where we're being paid to hold an asset others shy away from? Or is it a structural inefficiency, perhaps caused by market regulations or frictions? Without this strong because, your strategy might just be data-mined noise, a ghost in the historical data, with no reason to persist into the future. Once our idea has passed that crucial why test, we must move from the philosophical to the practical. This is the stage I call from qualitative to quantitative. A computer, you see, doesn't understand nuance. It only understands explicit instructions. Let's take the concept of value. What does that actually mean? Are we defining it by price-to-book ratio? Or perhaps price to earnings? You might even find that a metric like enterprise value to EBITDA works better for your purposes. The key is that a choice must be made. And this need for precision extends to every single component. What's our trading universe? What is the precise entry signal? When do we exit? How do we size the position? Every element must be transformed into an unambiguous, codable rule. This is the blueprint from which the entire system is built. Now, once we have a core concept, this is where I find the process becomes genuinely creative. It's about taking that single seed and seeing how many different plants can grow from it. Let's take a classic like momentum. The obvious definition is simple price momentum. What has gone up recently? What I like to do is expand on this. You could explore earnings momentum, looking at companies with accelerating profit growth. Or you might find that analyst estimate momentum, tracking revisions in forecasts, gives a more forward-looking signal. Then we vary the parameters. A 12-month look-back often captures that classic slow and steady trend, whereas a shorter 3-month window might capture a very different news-driven phenomenon. A tool I find invaluable here is mind mapping. It allows you to visually chart out all these potential pathways from one central idea, creating a whole family of strategies to investigate. So, with this whole family of ideas beautifully mapped out, it's tempting to dive straight into building a complex backtester. But here's a step I find absolutely invaluable: the initial sanity check. Before dedicating hours or even days to coding, what I always do is perform a quick litmus test. You might find it useful to simply take a few representative stocks and visualize your signal on a price chart. Does it appear to have some predictive power? Another approach I use is a quick analysis in a spreadsheet, perhaps checking the historical performance spread between the highest and lowest ranked deciles. The objective here isn't rigor, it's about speed. The goal is to fail fast and gracefully discard the most unpromising avenues, allowing us to focus our precious time on the ideas that truly have potential. Now, this brings us to a really subtle but vital checkpoint in our journey. We must ask, is our strategy genuinely clever, or is it just a different road leading to a very common destination? This is the heart of distinguishing true alpha from what we call repackaged beta. For instance, what I often see is a new strategy that looks wonderful, but in reality, it's simply buying small cap value stocks, capturing well-known risk factors you could get elsewhere. And it's crucial to understand this, because if your complex system is just giving you exposure you could get from a simple, low-cost ETF, have you really created value? What I do to answer this is use statistical tools like factor models to see what's really driving the returns. They help us understand if we've found something unique or just put a new label on an old idea. And so, We've charted the entire course, from that initial fleeting spark of an idea, all the way to a robust, testable hypothesis. We've seen how to refine an observation, seek inspiration from academia and industry, and then, crucially, filter it through a non-negotiable economic rationale. What I find is that this process of transforming a qualitative feeling into precise quantitative rules is where the magic truly begins. A truly great idea is the bedrock of everything that follows, but a hypothesis, no matter how brilliant, is powerless without the fuel to test it. That's why I do hope you'll join me next time for episode 5. Data is the new oil, sourcing and cleaning your fuel. We'll roll up our sleeves and dive into the absolutely critical world of data acquisition and preparation.
If you find this information useful, we would really appreciate it if you would like and subscribe this channel to help others find us. If there are subjects you would like covered, please add in the comments section and we will include it in future episodes.